And Escorts, well, yet another good quarter. Revenues were up about 32% on a YOY basis. EBITDA up 90%. The margins inched up quite dramatically, I might add. And I remember a conversation with Mr. Bharat Madan about a month and a half or 2 months before, where he mentioned that while quarter one will be strong, things might just start moving off a bit in quarter two, quarter three, and we'll need to review it as time comes. Well, let's try and review that with him. He's the Group CFO of Escorts, joins us right now on the phone line. Mr. Madan, good having you. Thanks so much for joining in. We'll come to the rest of the year in a bit, but congratulations on a very strong quarter, not just on the top line, but on the operational front as well. What's led to this?
Yeah. So I think it was essentially the growth across all three segments in which we are operating. I think both tractor, construction and railway, I think all three are done exceedingly good. So I think we remain bullish on all three sectors going forward too.
Okay, are we then therefore saying that not the skepticism, but the uncertainty over what the rest of the year numbers could look like at beginning of the year is now starting to look like more constructive, and if not 32% on the revenue, or if not the volume growth numbers that you had in first quarter could be enacted, but at least those numbers will look strong for the rest of the year?
Yeah, so definitely. So like you mentioned, I think we expected Q2 probably will be slightly weaker quarter, or would be a flattish quarter for the tractor business especially. And also because the construction also, I think it's normally a weaker period during the monsoon. So the activity there again can be slow. But Q3 again can probably more than make up for the shortfall which we see really happening in Q2. So overall, full year basis, we again remain very bullish. So we think the industry should grow double digit, and we actually are upping our guidance on tractor industry growth from 9 to 11%, which we maintained over here, to now 12 to 15% in the current fiscal.
Oh, that's interesting. So you are, I'll come back to the quarter, Mr. Madan, but you are, quarter two, you believe, has started off on a slightly sluggish note.
Yeah, which is expected because normally the monsoon on, so normally the activity there for the sowing season is already started, so it's over. So I think this Q2 probably will not look strong because the festive season also has shifted now to Q3. So there's everything I think will be now banking on the third quarter. So Q2 will be probably a more or less flattish quarter compared to last year.
Very interesting. What kind of impact on margins because of commodity costs? Would this largely have been a big factor there? And therefore, the part two of my question is, what do you expect the numbers to look like? Because 12.3% versus 8.5% is really a dramatic improvement.
Yeah, so there was some impact. So if you look at the sequential numbers on the tractor business, so our margins have gone down slightly because of the inflationary pressures on the commodity prices. So we were able to pass on about 50% of the price increase in first quarter. So balance 50% we actually taken an increase now in second quarter. So in Q2 probably we will not face the issue on the margin erosion on account of inflation. The volume may still have an impact on the overall margin. But otherwise, yes, the margin could have been better in Q1 if the inflationary pressure was not there.
You mentioned about how tractor numbers are looking up and you're upping the guidance there. Your construction equipment volumes were up 52% YOY as well. How is that looking to shape up over the rest of the year?
Well, construction, we believe, can actually give positive surprises, but only one bit of caution is since we'll be moving towards the election period towards the end of the year. And normally, second half for construction equipment is pretty strong. So we may see some sort of probably slowdown happening on the growth side in the last quarter of this year. But again, Q3 probably will be still very strong quarter again for construction. So overall, I think full year we still expect to be, it can give somewhere around 18-20% sort of growth for us in this year.
And while margins from that division have contracted a bit, the EBIT margins, do you believe they can improve, or would this be the steady state?
No, so full year basis, we expected the margin will be anywhere between the 4 to 5% sort of operating margin. So that should be able to hold on compared.
Okay. And railways, it's a smaller base, yes, but has done very well. If I'm not wrong, the EBIT out there quarter on quarter has done really well too. Can this momentum sustain?
Not this sort of margin because we have very strong product mix in this particular quarter. So the orders which we executed had very high margin. So we don't expect these numbers will sustain on a full year basis. But yes, the overall guidance for margins again in railway will be close to 17-18%, which is again higher, much higher than probably what we have seen in the last year, almost 3.5% higher than last year. So yes, I think the order book is looking strong as of now. We have more than 300 crores of order book as of end of June, which will get executed in next 10 to 11 months. So overall, still the margins will be up, but not in the range of 25% what we've seen happening in this quarter.
Okay, last question. You've been now comfortable on the debt front, I presume. If that and since that is the case, do you reckon that there is a chance of the dividend payouts rising over the course of time?
Well, so I think we had some strong growth capex program for this year and next year, because we are also putting investment on increasing capacity on tractor business. So we had outlay of about 300 crores planned for this year on the capex program, and similar outlay next year too, which is planned, which will also increase our capacity on tractor from 100,000 units to about 150,000 units. So I think barring these 2 years where we see there will be pretty strong outflow happening on account of capex and also large tax outflow which will be there in these 2 years. So definitely going forward, this is one of the key focus area. I think company will go through definitely a liberal dividend policy after these years.
Okay. Mr. Madan, we'll leave it at that. Many thanks for joining in today and congratulations on a strong quarter.